Hello, stock stars and fellow traders. This is Divestments coming to you with another short video. Today, I'm going to be talking about quadruple witching and also midday trading. But before I get started, I'd like for everyone to hit that subscribe button so that you know when I put out another video. And afterwards, please like and comment on the video. So quadruple witching. The date is September 15th, 2023. What is quadruple witching? It's when all the asset classes expire on the same day. So that's options and futures. All your options expire on September 15th, as well as your future options. Those expire on September 15th. How often does this happen? It happens 4 times a year. It happens in March, June, September, and December. And this month, it will happen on September 15th. So as a options trader, stock options trader, how will this affect you? It doesn't. About the only thing that you're going to get is during that week of September 15th expiration week, you're probably going to get a lot of volatility. On Friday, the actual date, you'll get more volatility. That's it. Other than that, it means nothing to us, except for you just need to know it so that you can be aware, and so that you can pay attention to the volatility so that you don't get into some trades and get whiplashed out, or have price whiplash up or down in the opposite direction of where you want it to go. So that's it for quadruple witching. The next thing I want to talk about is trading midday. And a lot of this applies to some traders that have a 9 to 5, or let's say, for instance, you get busy during the day and you have something to do and you just hop on in the middle of the day to see what's going on and see if you can put on a trade. Midday trading, the times that I'm talking about is it's the lunchtime from 11 to 1 p.m. That's what I'm considering midday trading. The first thing you want to do when you go to your charts for whatever stock that you're thinking about trading for that day, you want to go to that chart. You want to get the high of the day and the low of the day from that point that you get online. Okay, look back to your left on your chart and get the high that it's been for the day and the low that it's been for the day. So what you're going to do is you're going to take the high of the day minus the low of the day. Okay, and we're talking about the Qs today. So the high of the day minus the low of the day is 323. You're going to take that 323 and you're going to divide it by 2, and that's going to give you $1.61. And then you're going to take that $1.61 and you're going to add it to the low of the day, which is that 375.83. And that's going to give you the 50% up, 50% of the current day run up or down. So this 375 is the low of the day. So that's what you're going to take your 161 plus the low of the day, and that's going to give you the 50% mark of the move of the current day, whether it be up or down. And then you're going to draw lines at the high of the day, the low of the day, and then that 50% mark. Okay, whatever price that was at the 50% mark. So let's see what that looks like. For today on the Qs, this is what it looked like. So I have my line here at the high of the day, which is 379.06. Okay, if I came into the market after 11 o'clock, okay, but before 1 o'clock. So I'm looking at this this particular time here, after 11, okay, but before 1. And if I look at the chart, all I'm doing is just looking at the chart. 379.06 was the high, and 375.83 was the low. So 379.06 minus 375.83 is 323. You divide that 323 by 2, and you get the 161. You take that 161 and you add it to the low of the day, which is the 375.83. And that gave you 377.44. So that's this 50% mark right in here. Okay. So now that you've done that, your chart is going to look like this. So and I divide this up into 3 sections. So you got section 1 up here, which is if price goes up above this 379.06, okay? And at this point, we will be going long for, we will be going long for the day, and we will be making higher highs at this point, okay? This section 2 here, this is going to be your hardest section to trade, because in section 2 here, price can go either way. Price can go up from here, or price can go down from here. So this is your hardest section to trade. But whatever you do in this particular section, you want to try to make sure that you go with the trend. Okay. Today, the stock was in an upward trend. We know this because we have the stock making higher lows. Okay. So it started out 375.83. The next low was 376.66. The next low was 377.29. And these are higher lows. Okay. This low is higher than this one. This low is higher than this one. So this lets us know that we're in an upward trend. So you want to try to stay with that trend. So if you get in and, if you open up your charts and you open it up and you're in between a move. And what I mean by in between a move is that this price mark, okay, has already appeared, and the stock has been moving off of this price mark. Once you turn on your computer, you can see that, okay, I had a low here, a bounce off of the 200, and I got a price mark and a color change. If you get in and this and the stock is already moving off of a price mark with a color change, okay, you want to wait to get in until you get another price mark, okay? Until you actually see the price mark form and you get a color change. Then you can take that, because then you know that you're getting in at the beginning of the move. When you get in on the middle of the move like this, you don't know if this stock is going to make a new high, if it's going to break through here and go up. So if you get in, you've got to be ready to take what the market gives you. Whatever it gives you. If it gives you a dime, if it gives you 15 cents, if it gives you 5 cents, take it. Take whatever the market gives you. Your other option is you can scalp the other direction. And if you're looking at today, the only way I would scalp the other direction is if it fell below the 20, like it did here, and like it did here. It also did it here after it hit the all-time high of the day. It did it here as well. And even if you're going to scalp the other direction, you're still going to take what the market gives you. and get out. Whether that be 5 cents, 10 cents, 15 cents, 20 cents, whatever. Take what the market gives you. Don't allow that stock to turn around on you and you go into negative territory. Take what the market gives you and get out and wait to trade another day. That's all I have for you today. So enjoy the rest of your night.